Business Cycles Part 3 Opportunities. In our last videos, we gave brief overview on various phases of business cycle and how it affects people, businesses, markets, and economies. Let's find out how to benefit from it. If you have not watched our previous videos on business cycles, I suggest you should watch them first by clicking on the link provided below. So we now know that business cycle mainly consists of 6 phases, that is inflation, peak, deflation or recession, depression, burst and recovery. Phase 1, inflation. In this phase, most of the things look positive, demand for goods is high, and prices of commodities and goods rise. There is lot of competition and it is not easy to find great deals. Yet one can invest his capital in the sectors he understands and make money in later phase. It is good time to trade for short duration or to switch for better paying jobs. Since it is good time for most of the people, so better save some money for yourself and avoid spending on lavish items. Phase 2, peak. In this phase, most of the things look awesome and prices rise at very rapid pace. You can see typical graph of a stock movement. The prices double in very short time. It is the time everyone wants to get into the market and trade. However, best thing to do is sell your stocks and take profit out of the market. If you had invested in inflation phase and sell at this phase, you can make lot of money. One can also make lot of money from trading. However, it is highly risky at this phase and better to avoid it. And don't keep capital in the market for too long, as the boom time is always for short duration. Phase 3, deflation or recession. In this phase, market falls quickly. Those who invested in peak phase are trapped like a fly in a net. Rather than sharing profit of the company, people end up sharing losses of the company. This leaves them with two options. Option 1, sell everything at loss and get out of the market, which is hard thing to do. Or option 2, wait for the stock to recover. If stock fundamentals are good, it will recover in next inflation cycle, else it may never recover. Phase 4, depression. This is the phase everything looks negative. If you had saved in inflation phase or made money in peak phase, then surely this is the time to look for bargains. You will find lot of opportunities to buy here. You can get good stocks, your dream house and other investments at cheap prices. If you want, you can invest. However, it's better to do research and wait for great deals. Also, it is better to invest with surplus money, not with loans. Phase 5, burst. In this phase, things look miserable, but if you have surplus capital, you can invest and get great deals on almost anything. This is the real time to invest, as you can sell them at great profit in peak phase. Do good research before you buy, as this investment can easily fail or make you a millionaire. Phase 6, recovery. This phase shows slow rise in prices, increase in demand for goods and workers. If you are an investor, then be patient. Here also you can invest and buy stocks, home, whatever that makes sense to you, and wait for the market to climb further. Remember, profits are made when you buy, not when you sell. I hope this video gives you an idea on how to benefit from business cycle, but you must do your own research before investing and invest wisely. In our next video, we'll explain further the importance of business cycle on countries and economies. Please visit our website www.plenous.com to see more videos, and do add your precious comments, like, dislike, so that we can provide videos you love to see. Also, don't forget to subscribe to get our latest videos. Thank you and have a nice day.